if you don't get the price right on your property when you put it to market, you don't get any interest in it, and the market is dictating where the price is. They are doing that by the back door. They're not being honest about it. They're just saying, well, we don't think we're going to tax individual landlords, all of these things about capital gains, inheritance tax, all the things that, when you're trying to build up an investment portfolio as a small scale landlord, aren't landlords getting screwed?
I don't see any parallel in strength of the sales market compared to the strength of the lettings market.
Welcome to the All Things Property podcast with me, Simon Bacon of Preferential Properties. Every week, Ian Sadler and I will delve into all things property. We'll guide you through with friendly, no-nonsense advice. So welcome back to the All Things Property podcast with me, Simon Bacon, and
Ian Sadler.
So this week, Ian, I thought we would have a discussion about the state of the market as we see it. Obviously, we're doing this coming to the end of October, so things may well change over the next few weeks leading up to the budget. But let's take a snapshot of where we're at now and what our thoughts are on what the market is doing, because there is so much press about it, so much doom and gloom and not doing this and not doing that. What's your take on the market at the moment?
I think a lot of potential landlords are treading water. I think a lot of landlords, without doubt, are getting out of the market because of legislation.
Are you seeing that?
Tax issues. No,
I'm not either. But
I'll tell you
what
why.
Talk about it.
There is, but I'll tell you why, because our portfolios are perhaps different. Mine is predominantly investment landlords, and they're in it for the long term. They're prepared to do the peaks and troughs. So they're not going to have a knee-jerk reaction to government legislation, tax changes and so on. It's the people who have investors who are leveraged to a higher extent, where the loan-to-value is up in the 80s, 85s, as opposed to other investors whose loan-to-value is something more manageable, 50%, which mitigates the losses that they'll incur from tax changes, because the mortgage payment they're paying is reduced with a lower loan-to-value ratio. So they can take the hit for the long term.
But in terms of where the market is, do you have concerns that maybe we're going to end up with a similar situation? Do you remember, 2007, 2008, 2009, where lots of landlords ended up leaving the market because they were on low rate mortgage rates, and their mortgages came to an end. Mortgage rates had shot up, and they just weren't able to get the loan to value.
That wasn't the only factor. I think that is a factor, but the main factor was the loan to values. A lot of people were vastly over leveraged, and it made profit making portfolios, particularly in the London area, profit-making portfolios, non-profitable. So a lot of people were running at a loss and had no choice.
But I see some real similarities with that in terms of, and I remember when we were selling houses around that time, and the market was on a downward slope, and you had sellers who were putting a property on the market at a price, and a month later the market was down here and they weren't able to sell it. And my view at the time was that you needed to get in front of the market in order to be able to sell effectively. Now, for many people, that's a real issue. If they think the market is, your house is selling for, let's say, £300,000, but the market is going down slightly and the market is running down, really, in order to get a buyer for it, you're going to need to pitch it at 280 or 290. I see some similarities with the market, and I know there's lots of talk about where the market is going, and people are getting out of it from landlords' perspectives, and where are we going to be with mortgage rates. But I see some real similarities with house prices, rental values have leveled off, and actually we're seeing a slight reduction in some of those market rents.
Well, the rent increases based on a supply and demand theory, rental increases over the past 5 years have been pretty dramatic. They realistically could not have continued at that rate, so they had to peak, and they had to drop off in certain ones.
And do you think they have peaked?
They peak for now, definitely.
Yeah.
But I think at the end of the day, if you've got the right property in the right area, whether you're an investor or a reluctant landlord or whatever kind of landlord you are, then you will always let it at a market rent. It's properties that are in the band, the lower 30% from a location or quality perspective, that you struggle to rent. And those are the only ones, in my opinion, that will suffer rent decreases.
Which is why when you're giving advice to landlords, there are some real good criteria that they should be looking at when choosing a property for rental perspective. You know, it's the same old, close to good transport links, good location, good schools, good social and recreational facilities. They're the principal ones. Well, and the quality of the properties.
Yeah,
Is it?
but the parameters are narrowing. There was a time 10, 12 years ago where you could let anything, no matter where it was, and you get a market rate because you got a lot of demand for it. The parameters are narrowing now, so you have to have the right kind of property in the right kind of area, in the right kind of condition. So it puts you in the top 15, 20% of properties available. And if you imagine there's two circles, one small circle of supply of properties and one big circle of supply of tenants, people gravitate towards quality. So you've got a far better chance of letting a property and keeping it stable throughout troublesome times by having fitting all those criteria, quality, location and rent levels.
I know that you obviously focus entirely on the lettings market.
Yeah.
Okay. I deal with the lettings and the sales market. So I see perhaps a slightly different market than you see, given that you are more on the letting side of things. How do you see the lettings market globally at the moment?
Okay. I don't see any parallel in strength of the sales market compared to the strength of the lettings market. The rentals market has grown over the past 30 years, would you say? Mm-hmm. It started with reluctant landlords, negative equity, all those things that forced landlords to let. Anything that's happened to the property sales market since then has been irrelevant to the lettings market. It's grown for various reasons. It's gone from strength to strength over the past 25, 30 years. And that's cultural changes, habit changes, people's view, social changes. People's view on your average tenant was that they were the poor relations of the property market. They couldn't afford to buy, so they were reluctant tenants. That completely changed when people needed mobility within the workplace. They needed short-term or 1, 2 year, 3 year tenancies to move from A to B. When the job market was difficult, that was brought into the equation. So whenever the property market has had its ups and downs, the rental market has consistently grown over the past 20 years, and I think it's in a really healthy state still.
Do you?
Yeah.
Well, the rental market is in a healthy
Yes,
state.
I do. From an my perspective,
That's an investment perspective, isn't it? If you look at that from a tenant perspective, I would say to you, tenants would be saying, the rental market is a dreadful market at the moment. There isn't enough supply. There's too much demand. Rents are sky high. Anybody wanting to rent because they don't have the option to buy will find that actually our rental system is completely screwed for them, surely.
Yeah, no, I agree. How can I disagree? My view is purely from a viability and investment perspective.
But from a government perspective, you know, my personal view is that we are seeing legislation to protect tenants. We're seeing legislation to hammer landlords, the individual landlords. It seems to me like the overarching issue is that the government of the day, whether it's Conservative, whether it's Labour, and dare I say it, whether it'll be Reform in the future, governments do not seem to want individual private landlords. And yet what they want is corporate landlords owning large swathes of portfolio properties that they can then give to tenants. Now, we've moved away from the system, I suppose, of a joined up housing market, haven't we? There seems to be little awareness that individual landlords, people with one property to rent, or what I call small portfolio investment landlords, 3 or 4, who are looking at it as a pension alternative, they are trying, or the government of the day is trying to push them away.
The government wants a rental utopia. And if they'd wanted that, they should have started this 10, 15 years ago and approached large institutions, pension companies that would buy tailor-made buildings.
But they're developing the back door, aren't they? They are doing that by the back door. They're not being honest about it. They're just saying, well, we don't think we're going to tax individual landlords, all of these things about capital gains, inheritance tax, all the things that, when you're trying to build up an investment portfolio as a small scale landlord, aren't landlords getting screwed?
Yeah, well, so why did any government take a global approach on landlords? The approach should have been to eradicate rogue landlords and make the private rented sector a healthier place to rent property and net property. Instead, they took a global approach. They removed tax relief on mortgage interest. They changed capital gains rules, stamp duty on second homes. So many changes that affected the good landlords as well as the bad landlords.
Yes, absolutely. I mean, for me, I just think the property market as of today is in a real
State of flux.
Yes, it is. It's waiting for the budget. It's waiting to see what the government is going to do around tax and inflation. I think that, what I'm seeing is that, that there's a lot of talk that individual landlords are going to be leaving or are leaving the property market, the lettings market in their droves. My experience is that of the landlords that I've got, we are seeing some leave the market, but that has happened year on year as people's circumstances change. But I'm not seeing the flood of investor landlords, small scale investor landlords, leaving the market. What I'm also seeing is on the sales side of things that properties are selling, but the market is quieter than it has been in some time. And I think that is because of the budget and because people are waiting to see what is going to happen. I think prices on the letting side have stabilised, and I think, despite what they're saying elsewhere, I think there's been a slight reduction in rental values, what properties are going for. And I think on the sales side of things, if you don't get the price right on your property when you put it to market, you don't get any interest in it. And the market is dictating where the price is. So for me, it's a real state of flux at the moment. And everybody needs to probably recognise that, there is a sense of needing to be realistic when valuing properties, and a real state of flux in terms of what is the next 12 weeks going to bring in terms of the budget leading up to Christmas, which is traditionally a slightly quieter time of the market. I think the market is in a real period of uncertainty at the moment, and what I'm saying is we've still got good tenant demand, but tenants are being much more, I was going to say selective, much more conservative with properties that they want to go for.
So, despite all the fundamental changes that the government is making in the structure of the rental market, how can the renting a property be any better for a tenant post the Renters Reform Bill? At the end of the day, the most important factor of any tenancy is the level of rent you're paying. So if landlords are leaving for whatever reason, increasing taxes, whatever else, then that's going to reduce the supply of properties. It'll at least stabilise rents, at worst put them up again. So the government shoots itself in the foot with these policies. Legally, it's a better place to rent a property after when the Renters Reform Bill comes in. Financially, it's worse. So how can it be a better place?
I don't know that it will be financially worse. I think if you look at it from a tenant's perspective, the idea of the Renters Reform Bill is that it gives tenants more security in their property because it does away with fixed-term tenancies.
Yeah.
So a landlord can't just go, oh, I've decided I want you out. But the reality is that never happened anyway. I've never, ever had a landlord who's gone, I've got a really good tenant paying me a decent rent, looking after the property. Do you know what? I fancy a change. I'll ask them to leave.
That's crazy. Nobody would ever do that anyway.
No. But so in terms of the Renters Reform Bill, what's the Renters Reform Bill trying to do? I get certain bits about it. I mean, you know me, I'm a dog owner. So pets in properties is a real difficult one.
That's a subject for another podcast.
It is another podcast topic, and we will talk about it. But what I'm trying to highlight is there are bits of the Renters Reform Bill that I think are positive, and landlords should not be afraid of. But there are other parts where I'm thinking, how on earth is that really going to help a tenant? Because, you know, if you do get landlords leaving the market, then, like you said, there will be less supply, which we've got a lot of demand, and by nature that is likely to push rents up, surely.
If you ask the tenant to highlight the problems in the rental market now, they wouldn't have being able to leave at any point after 2 months or 1 month of my tenancy, and the freedom to do that, and that the landlord can't give me notice unless he wants to sell it. The only thing they focus on is the rent level. That's it. And
I think
the government has well, it does have an influence on that because they're doing things that will increase rent levels, and they should be focusing on increasing supply, not hammering landlords, increasing supply for tenants. Everybody is happier. Introduce the legislation, make it work, get councils to change, to chase rogue landlords, to start giving fines that really mean something and hurt people. And gradually, the amount of rogue landlords will taper off, and you'll have a stronger market. But the things they're doing, the things the government are doing, are counterproductive.
So really, I think we've probably set out what we think, or where we think the rental market is at the moment, and what it looks like right now. What about 12 months' time? Where do you see the rental market after the Renters Reform Bill has landed, which it will do shortly? Where do you see the rental market maybe 12 months' time?
From two perspectives. From a tenant's perspective, I think they'll be legally in a better position. I think physically in a worse position because there'll be fewer properties in the market. Some landlords will leave when they have national insurance taxes confirmed on rental income, if they are confirmed, and they won't make that decision to leave until that reform bill is law. From a landlord's perspective, it's got to be good. It'll be in a strong position purely from an asset stroke investment perspective, because the number of properties will decrease, because the number of landlords decreased. I can't see any social or work changes making the tenant supply decrease. So from a landlord's perspective, it'll be in a strong position. And from a tenant's perspective, treading water to a worse condition.
Okay. So I'm going to ask you a couple of questions then, and I'll then answer my own questions afterwards. And we'll take a bet to see who gets it right. Okay, so 12 months' time, do you think rent levels will be, for properties, will be higher or lower than what they are now?
I think they'll stay exactly the same.
That's very boring, isn't it?
It's three-way tie, isn't it? Higher, lower, or stay the same.
Okay, I didn't give you stay the same option, did I?
Well, that's my opinion, but if I had to say one, it would definitely be lower rather than higher.
Okay, so you think rents will stay the same or go down?
I do.
Okay. In terms of supply of rented properties,
It's got
higher or lower?
lower. Absolutely, definitely lower.
Okay. So 12 months' time, we'll revisit that and see whether you're right.
Okay.
In my opinion, I think that rents, and I'm not saying this just to argue against you, okay? Because I'm not going to argue against you. I agree with you. I think the rents will be slightly lower than what they are now. I'm not sure whether the supply will be lower. I think the supply will probably stay pretty similar to where it's at now. What we're not going to see is any real changes.
I wouldn't disagree with that. I think it's going to be the lack of supply is going to be a ripple effect and won't hit the market maybe 12, 18 months, 2 years' time. But I think ultimately you'd agree that because of things that are happening in the rental market, supply has to diminish.
Yeah, definitely. All right. Thanks so much for that. Welcome. I think next episode we need to look at the sales market and get our views on that. Okay. Thank you very much for that, Ian.
You are welcome.
I know. I'm sure that, this is a subject that will run and run, and there will be many different views on where the market is and where it's going. So if you're interested and want to share your views with us, then please do comment and let us know what you think the market is going to do in the next 12 months. Thanks for tuning in to this week's episode of the All Things Property podcast. If you found this episode useful, don't forget to subscribe, like and share. These things really help us reach the people who need to hear this advice. See you next week.